Hello, I'm Alan Kohler, founder of Eureka Report, which is now part of Intelligent Investor, and finance presenter and columnist for the ABC.
And I'm Stephen Mayne, contributor at Intelligent Investor, founder of Crikey and shareholder advocate. And we are the Money Café. Not in the cafe today. I presume you're what? You're over in Venice at the Bezos wedding, are you? Is that your excuse this week?
My invitation must have got lost in the mail. And
obviously
yours did
200.
too.
Yes, I'd love to be there, with Jay-Z and Beyonce and Mick Jagger.
I read this morning that 90 private jets have landed on airports around Venice.
Yes, and Bill Gates, it is just ridiculous. So ostentatious display of wealth. It's going to be a 3-day affair: Thursday, Friday, Saturday. And
have you ever been to a celebrity wedding?
No, certainly not at that level. I guess the most famous one I've been to, although it became retrospectively famous, was Anastasia Palaszczuk. I went to her wedding, to her marriage to George Megalogenis in, I think it was late 1997, at Customs House on the banks of the river.
What was she then?
She was a Labor staffer. She was a Labor staffer. So it was a staffer, journo, press gallery type relationship. I think they separated maybe after a year or two. So hence it doesn't get talked about. But that was a well, in hindsight, I went to Anastasia's wedding, but
Well, I went to Venice a few weeks after my wedding. So I don't know if that counts.
Very nice. I love Venice. I'm jealous. But you could have been in The Hague. That would have been exciting. Did you listen to the Trump press conference this morning out of The Hague?
No, but he's saying it's 12. It was a 12-day war.
12-day war. Mark Rutte, the head of NATO, is calling him daddy, and he's talking about the naughty kids and the 12-day war.
Oh God.
He was ripping into Spain. I think Albo's got this coming. Spain won't lift the 2%, so I think Albo's going to cop a direct gobful from Trump at some point. If you just listen to the way he absolutely flogged Spain for refusing to move from the 2% to 5% of GDP on defence spending. So, and he got stuck into Jerome Powell yet again, calling him mentally unstable, I think it was. So,
mentally unstable?
Yes.
Unlike Trump, who was
slash rates.
Unlike Donald Trump, who was a stable genius.
Stable genius, that's right.
So you've had a couple of gambling extraordinary general meetings. Tell us what's going on.
Well, it was a pretty wild day yesterday. I went to the PointsBet EGM, where they were voting on a $400 million takeover by a Japanese company called Mixi. And I logged on, and I'd already voted by proxy, and they said, by logging on here, do you want to rescind your proxies? And I sort of said, no, I don't. And then I went and asked a couple of questions, and I thought that was it. Turns out that Betr, the old Blue Bet, the rival gambling company to PointsBet, which has bought 20%, had done exactly the same thing as me. They'd logged on with their 20%. They'd already voted against. They'd already killed the deal, they thought. And then they accidentally, it seemed, fat-fingered and cancelled their proxies.
Oh.
It seemed. And so PointsBet came out and said, we thought we'd been defeated, but actually they failed to vote. The scheme has been passed. And then PointsBet said, we want to recount. And then Computershare came through this morning with it's our mistake, system error. We accidentally cancelled the proxy. And so after all that soap opera, the scheme has been defeated. It's before the federal court as we speak, 10:30 a.m. on the Thursday morning. And the Japanese company will come back with their alternative takeover bid, which is only requiring a 50% acceptance rate so it's a conventional takeover bid. And Betr, meanwhile, is still talking about their rival takeover offer. And all of this is just to become the fourth biggest player in the online gambling market in Australia, way behind Sportsbet, which dominates everyone.
Well, I was going to ask you, Stephen, my main question is, do we care? Who cares?
Well, it's pretty weird that a Japanese social media company was paying $400 million for PointsBet. I mean,
is anyone going to pay $400 million for them now?
Well, the stock's still at 118. So, I mean, they've still lost hundreds of millions of dollars because they went crazy in America with their massive expansion over there when sports gambling got legalized. But it just goes to show that even in Australia, it's just the world's biggest gamblers. And I was quite appalled. The New South Wales budget came out last week, Alan, and they're forecasting hotel pokies tax revenue to rise from 1.3 billion in 23-24 to 1.9 billion in 28-29. So,
that's almost a 50% increase. Correct.
I know. So we're already the world's biggest gamblers, and New South Wales, which is the worst state, is projecting this to go on and on and on, which leads into the other EGM I was going to talk about yesterday, which was poor old Star Entertainment, the casino company, which is basically going broke. And they had we voted to approve the emergency effective takeover by Bally's, this big American casino company, teaming up with Bruce Matheson, taking control. With the only deal on the table, we'd go broke otherwise. And it's just an amazing situation. I mean, you've got Justice Lee, remember the famous judge from the Brittany Higgins case. Austrac has gone to him and said they've agreed they're a bunch of dodgy money launderers, and Austrac have said we want to fine them $400 million. And Bally's have written to the court and said we can only afford $100 million. And the judges said, I'll tell you in September. So this vote is going on, yesterday, with nobody knowing whether there's going to be a $400 million fine coming down the line for poor old Star Entertainment, which is not allowed to have cash in their casinos, unlike the pubs and clubs. So their pokies revenue has crashed 30%. They've had massive blowouts in Brisbane. Shareholders have lost $4 billion. It's just an amazing soap opera. So there's no shortage of action in the gambling space.
And Judge Lee gets to decide what the size of the fine is, does he?
Well, he'll decide the size of the fine. But you've basically got 6 different players here. So you've got the state government in Queensland. Do we give them a tax cut? Because the Queen's Wharf proposal on the river up there has been a total blowout disaster. What do the Queensland pollies think? You've got the New South Wales government, New South Wales regulator, who, some of these licenses are still suspended. And then you've got Austrac coming over the top from Canberra going, we're going to flog you too. So this company's basically been bankrupted by their own stupidity in building a monstrosity on the banks of the Brisbane River, and a massive regulatory overreach where all the regulators have just smashed them. But meanwhile, pokies in the pubs and clubs in all 5,000 venues all over the country goes on, still losing $15 billion a year on the pokies, but we're going to smash this casino company into smithereens. So yeah, pretty lively action on the gambling front.
Well, you've had an excellent couple of days, Stephen. That's very good. I've had an excellent few days as well, because I've been subject to a torrent of abuse on Twitter about my piece on the ABC News on Sunday night, in which I kind of half suggested there should be an inheritance tax. And,
it was a good piece. You're right.
So I've been accused of being a communist so many times. I can't believe it. I mean, we're still talking about communists as if people are communists anymore. Really?
It is ridiculous. I mean, so many other countries have an inheritance tax. I mean, in the UK, the first £325,000 is free, and then it's 40%. I mean, not only is it a death duty inheritance tax, it's a huge tax. All you're proposing is not. You're just proposing something modest, aren't you? What, 10% or something? But most countries have it. So you're right, Alan.
Yeah, maybe. But look, I think that what I've learned is that it's probably too hard. And having been abolished by Joh Bjelke-Petersen and Malcolm Fraser in the mid-1970s, I reckon it's probably too hard to bring it back. And I spoke to Richard Holden this morning, who's a professor of economics at UNSW, who wrote a piece in the Financial Review in which he suggested a progressive form of GST. And what he says is that they should raise the level of the GST from 10% to 15%, but that spending up to $12,000 should be excluded or exempt from it. So it only applies to anyone spending more than $12,000 a year. So I rang him up to say, well, how would that work? And what he says is that how it should work is that you take 15%. So the GST is 15%, and so you take 15% of $12,000 and you just send a cheque to everyone of $1,800, which is 15% of $12,000. You send everyone a cheque for $1,800, and it's really simple and clean. And everyone at the end of the year, he thinks it should be probably twice a year, so $900 in June and $900 in December, just arrives in everyone's bank account, and that means that any spending up to $12,000 by anybody is exempt from GST, and if you do that and you raise the level from 10% to 15%, then the extra revenue is $45 billion. Which is a lot of money. And I think that's not a bad idea.
Any tax reform, Alan, I suggest, will have to be a package. Standalones like, well, here's an inheritance tax or here's a massive change of the GST is never going to fly. But you are right. We're overly reliant on income tax and to a lesser extent corporate tax. And we're under-reliant on indirect taxes and things like inheritance taxes or taxes on capital and taxes on wealth. So there should be a reform package, but what pollies have got the guts to do it? Can't see it.
Yeah, anyway, Richard says you attach it to, you make it a package that includes income tax cuts, because he agrees that, income taxes are too high. So he says cut income taxes for part of the $45 billion and use the rest for, reducing the deficit. And I think, good on you, Richard. There it is. I'm going to do another piece on that now.
Very good, Alan. Well, look, I was looking at the New South Wales budget again and the revenue forecasts. How much do you reckon they're taking in stamp duty on property up there? It's going to be, this year, it's going to be up $1 billion to $13.35 billion.
Crikey.
That is an enormous amount of tax from one state from property stamp duty.
From one state.
$13.35 billion. It's getting up towards the entire tax revenue from super. I mean, it's super's higher than that, but just goes to show that the incentive not to move, the lack of mobility that flows from punitive stamp duties is very lucrative, but there are quite a few downsides. It's not a good tax. Now, we should talk about Virgin before we...
so are you going to invest in it, or are you going to, like Warren Buffett, lie down until the urge to invest in the airline goes away?
No, I will buy my standard $500 worth of shares, which is the minimum under Australia. And I must admit, the Computershare CEO was telling me that this is a ridiculous rule that's only in Australia, that a shareholder has to spend $500. And that's
is that
that's
right?
the
I didn't know
minimum
it was only
password.
Australia.
Apparently
right?
Other countries don't have that. You can just buy one share if you like. But pay to play, so I will buy into Virgin. But look, it's going well. The stock's up again today to $3.38. So the float price at $2.90. So the market cap's $2.6 billion against the Qantas market cap of $15.7. I guess the problem is there's no dividends promised. There'll be no franking. And then you got all that, they spend $1.1 billion a year on fuel. So you got the usual roller coaster with the fuel price, although they say they're fairly well hedged for the next over the next year. But look, they've scaled back the international, so it's just a cozy local duopoly, and it was well priced.
But even though it's a cozy duopoly, there's a sad history of second airlines in Australia not doing very well.
Yes, well, it's usually caused by the third and fourth airlines that come in. So,
that's possibly true. So as long as there's only two of them, and there's some idiot doesn't start up a third airline.
Yeah, I think what they need to do is, and so a very well placed expert in this space made this comment the other week to me, that they probably should launch a separately branded low cost airline. So Jetstar is an absolute juggernaut for Qantas. Absolute juggernaut. And Virgin's just sort of stuck with one brand in the middle. So Qantas can eat them at the top end with the big corporates, eat them at the bottom end. And perhaps the key strategic move for Virgin is not go back into long-haul international, although they're doing toe in the water with Qatar, flying to Doha initially. But the strategic move they probably should make is a separately branded low-cost carrier like the old Tiger, so they can go head-to-head with Jetstar.
Didn't they invest in Tiger?
Oh yeah, they had Tiger and it went broke, and so. But the dual brand model works brilliantly for Qantas, and perhaps the way the duopoly should settle is so that someone else doesn't come up with a low cost competitor taking on Jetstar. If Virgin gets in first, then that might scare off any other new startups to come in. But that's where they're a bit vulnerable, I think.
Maybe Virgin's a better low-cost brand and they should launch a new business class airline.
Well, that was what set the boat the first time. Your mate John Borghetti.
No, but he tried to turn the whole thing into business class.
Yeah, that's right. So they are more upmarket than they were in the old Virgin Blue days. So they do have, price-conscious small corporates. They do have lounges, although they even scaled them back a little bit when they crashed. But look, they do have lounges, so they can deal with the corporate market to a degree. But they, by definition, because they're trying to please everyone with one brand, they are missing out on that fast-growing casual leisure traveller, which Jetstar is really doing well on, albeit Jetstar having just announced they're closing Jetstar Asia because they're losing money up there and need to bring the planes back to help with their massive capex spend on the new fleet down here in Australia.
The posh lounge that John Borghetti built did have leather walls, which was incredible.
Yes, he did go a bit over the top with that. So,
oh boy, did he
yes.
what?
Now, what about just lastly with Trump and the Middle East? What's your take? And I guess tariffs as well. Now, if it is just a 12-day war, then it all comes down to July 9 tariffs with very few trade deals. So it's still a wild ride, but the market doesn't worry with Trump. What's your read on Trump and the broad play?
Trump's had a good week. That has to be said. I mean, as you said, NATO's agreed. They've all agreed to increase their defence spending, so he's kind of big win there. And Iran seems to be subdued. I mean, they're not. They had that. They fired a few rockets at Qatar, the military base in Qatar, but told everyone they were going to do it, and none of them landed. So that seems to be it. So there is no war anymore. It was a 12-day war, and it's over. So look, I think I think this week has kind of really been a big enhancement of Trump's authority, to be honest.
Unless things blow out,
things can change, yeah.
The Iranians trigger a cell and do some bomb in New York City, for right now, I think you're right. And are we allowed to drop the F-bomb on the Money Café now that Trumpy's doing the F-bomb in press conferences?
I've no idea. Better ask Greg.
I thought the press overplayed that. I mean, he said the F word, It was all part of his intimidating the Israelis to stop, to basically pressure them to put down their arms. And it seemed to work, assisted by dropping the F-bomb as he got on the plane to NATO. So.
That's right. So I don't think that did him any harm either, to be honest.
No, I agree. I think, we should be able to. We don't do it on the Money Café, though. We're a family show.
Yes.
We should do some questions, Alan, I reckon.
Yeah, let's go on to questions. Before we do that, let's have a quick word from our sponsor.
Think investing's out of reach? Think again. With InvestSMART's Fund Later, you can own a $10,000 ETF portfolio with just $4,000 up front. Fund Later covers the rest, lending you $6,000, which you repay over 20 monthly installments, including a facility fee. There's no interest, no margin calls, and no waiting. Whether you're new to investing or a parent looking to give your kids a brighter future, it's a smart way to fast-track your investment journey. Choose from 4 expertly managed portfolios and get $10,000 working for you from day one. Learn more at fundlater.com.au. Terms and conditions apply.
Now we're going to group Lachlan, Ted and Ashley's questions all together as one and just summarise them on AI. And everyone loved your big AI discussion with James last week, but pointing out that AI is not so good if everyone's costs are cut. Then a lot of jobs will be lost and businesses will go broke if they don't embrace it. So it's a bit of a zero-sum game and it will make the rich richer and the poor poorer. So I guess that is a fair point, that if you're sitting there saying, I don't need AI, I can just keep doing what I'm doing. Well, if your competitors all do AI and can use the productivity gain to cut their prices by 20%, then your business will go broke because it will be uncompetitive. So maybe it will mean lower prices for consumers is one point.
That is one of the points for sure. I mean, our discussion last week was triggered by triggered by Meta, Mark Zuckerberg offering sign-on bonuses of $100 million US to OpenAI engineers to join Meta. because he wants to set up a team that will develop super intelligent AI that is more intelligent than human beings. That's the plan, and he's offering $100 million, and we were kind of gobsmacked at that. And also the fact that, according to the OpenAI CEO, Sam Altman, his people are knocking him back. So they're turning him down $100 million. So as James Thompson said, that none of this makes sense except that they all think they're all going to make tons of money from AI. And the only way you make tons of money from AI is by sacking people, human beings.
Yeah,
and
all those
costs.
small businesses that do sack a lot of people are going to have to presumably pay a lot for the AI service to deliver what the humans were doing before.
Correct.
Because you can't invest hundreds of billions without getting a return, and who's going to pay? The users of AI, presumably.
Yeah, that's right. But they, everyone's betting that the companies, the world's companies, all of them will invest in AI because they want to get rid of the human beings because they're sick of them.
And we're going to all become even more entangled with big tech. It is an interesting question to ask yourself. How much are we all paying to big tech? I mean, I'm giving money to Musk through Twitter, Apple, Google, Facebook, Microsoft. I just paid $170 last week. People should say, what is your current sort of monthly tally that you're giving to big tech? Because it's probably going to keep rising, as we all have to buy in these bolted-on AI services that will come with the initial entanglement we've already got with all these giant companies.
But the question is, what's going to happen to the people who lose their jobs? I mean, and because we're all sailing along assuming that it's going to be okay. Everyone says, well, all the other revolutions, technology and industrial revolutions in history, it's turned out okay because even though a lot of human beings were replaced, they got other jobs. So we haven't had a problem. And it's true that we've got 4% unemployment roughly at the moment, even though there's basically a lot of robots around in manufacturing. So it hasn't actually led to a decline in employment yet, despite the fact that we've already had a lot of robots and already got a lot of AI. So everyone's kind of a bit complacent about it. I don't know. I mean, maybe it's right to be complacent. I don't know. It's certainly so far so good. But you do wonder how all these companies are going to save the money that's going to be required to meet the costs that the AI companies are assuming with trillions of dollars of valuations on their market cap. I mean, if you look at the top 4 AI companies, which is kind of Meta, Alphabet, Microsoft, and Nvidia, are worth $13 trillion. I mean,
and even little old Broadcom, which most people haven't heard of, is currently worth $1.2 trillion, and it just makes chips for the AI companies.
Yeah.
So
these valuations suggest that the investors at least think that there's going to be a tremendous amount of money to be made by the companies selling the AI to other companies that were buying it in order to save costs. Yes. And so, that does suggest there's going to be a lot of unemployment.
Yep. Universal basic income, I reckon. Now, Fiona's got a related question in response to James's radical idea suggestion about coalition members sitting at the productivity round table. Fiona's suggesting that they should allocate one seat to an AI model and see what the bot thinks about the observations and opportunities at the productivity round table, which will include an AI discussion. So what do you think, Alan? Do we let the machines attend?
Yeah, well, I'm all in favour of this. I'm using ChatGPT all the time now, and ChatGPT and me have got a very, very strong relationship. He or she is my best friend now. So I think that having them in Parliament, yep, no problem.
Well, speaking of this, Ted O'Brien will be attending. That came out yesterday with Susan Lee's appearance at the Press Club, which I thought was a very impressive performance. I don't know if you saw it, Alan, but so Ted O'Brien is going to represent the coalition. So one seat, not 5 seats, but at least there will be some attempt at
makes
inclusion.
I reckon we can call it bipartisan now.
Yeah, I think that's a good result. And we've got a question later on. Someone, a 24-year-old female listener, saying that she fed the Macquarie notice of meeting into ChatGPT, and they spat out some voting recommendations for her.
Oh, right.
Although the problem is that it was just going with the board on everything yet again. So ChatGPT got spun by the Macquarie spin doctors and has come out with a recommendation because the listener has said that I'm interested in climate and but ChatGPT has said to vote against the climate resolution, which has been put up hostile for the first time. First time Macquarie's had a hostile climate resolution. Don't fund fossil fuels, etc., etc. And ChatGPT saying go with the board and vote against that. Supposedly after being told take on board my climate concerns from a young female shareholder voting for the first time.
That's why we need human beings.
We need humans to see through the Macquarie spin and back the climate resolution.
That's why, and not just any human beings, Stephen. We need you.
Thanks, Alan.
Okay, Dave says, last week you seemed resigned to the fact that the inheritance tax was inevitable. If the boomers have hoovered up all the wealth and left my generation with the environmental cleanup bill, can you explain to me why an inheritance tax is a good thing now that we're finally set to receive a piece of the pie? Are we? What do you mean?
Well, Dave's lucky. Dave's hit the lottery with the bank of mum and dad.
Oh, I see.
But the inheritance tax is for the people who don't have the winning ticket with the bank of mum and dad. So Dave's just saying, my parents are rich, leave them alone. And your policy offering, Alan, is that there's massive generational inequity. The government's short of revenue and they should help themselves to a little bit of the richest generation's asset pile after they've passed and spread it around equally on, NDIS, Medicare and all the other things that the government spends money on. So Dave should stop thinking about himself and think of the people who don't have wealthy parents.
I think Dave needn't worry. My week of abuse has taught me that there's not going to be an inheritance tax. There's going to be an increase in the GST. So, Dave, cop that.
Yeah, well, they're the two extremes in terms of regressive tax policy and progressive tax policy. Inheritance tax is a very progressive tax policy. You only tax the rich after they've gone. And the most regressive tax policy, obviously, is the GST, where you slug the poorest people the same. And did you notice that old Trumpy raised $22 billion in tariff revenue in May alone?
I know. Speaking of
didn't spike inflation.
Speaking of regressive GSTs, that's your tariff. That's for sure.
And it hasn't spiked inflation. So
no, well, that's right. So that's the other win that Trump's had this week. Big increase in tariff revenue into the government with no increase in inflation. Amazing.
Yeah, he's still running a deficit of 7% of GDP. So he's a mile away from balancing his budget with tariffs. But
that's true, yeah.
I think Powell is right. Sit back. The inflation could yet come with these tariffs. It's just 1 month. And it hasn't come through yet because everyone, stocked up early to beat the tariffs, this sort of stuff. So give it another 3 or 6 months, and then we'll see the inflation coming through from the tariffs. Now, Ellie says, thanks for the podcast, although my primary school kids don't agree. It's a wonderful listen. We continue to hear about the housing crisis in Australia, and the government talks about what they're doing to improve housing affordability, but no one talks about the effect that mandating a minimum 7-star energy rating as part of the 2022 NCC agreement and the impact this has had on increasing construction costs, making a whole lot of new builds unaffordable. And I think I heard the head of the Productivity Commission admitting in a recent speech that, yes, 7-star energy ratings had contributed to higher construction costs. So do you think there's a case for winding that back, Alan, to make housing more affordable?
Oh, look, I think
you'll be called a climate denier if you agree.
Well, that's right. I think
it's a tricky one.
It is a tricky one. I mean, people who obviously don't think climate change is a problem think that it should be wound back. I would say I do think climate change is a problem. I think let's look at other things. There's plenty of other things to deal with first.
Yes, cut some stamp duty taxes and okay. So you're saying yes, that would reduce the cost, the short-term cost, but not the long-term climate cost. So
I would say it should be
not a supporter of that.
I would say it should be on the list, but towards the bottom of it.
Yeah, I'd agree with that.
Sylvia says, in the early days of rate rises, you guys talked about the impending mortgage cliff. Well, the sudden repayment shock that was going to hit borrowers when their cheap COVID-era loans expired. This was supposedly going to force sales and crush house prices. That didn't happen. So what did? Death taxes and the Australian residential property going up. Well, she's right. Sylvia's correct. It didn't happen. There wasn't. And in fact, I was reading something the other day saying that mortgage arrears in Australia are still well under 2%. They've gone up a bit, but they're 1.68%, which is, very, very low. I mean, so people did not get into trouble. They cut back elsewhere.
I agree.
Everyone's kept their mortgage payments up, no matter the fact that they've switched back to variable rates after their very low fixed rate mortgages that they started during the COVID, during the pandemic.
And we had Treasurer Chalmers smiling like a Cheshire cat this week with the low inflation figures that came through. And you were on the ABC News last night saying 90% likelihood that we're going to get another rate cut.
Well, in fact, this morning that's up to 101%.
There's no such thing.
It's just above certain that that there'll be a rate cut in July. That was, and I went into the monthly CPI spreadsheet that the ABS publishes this morning, because they don't tell you, they just tell you the year-on-year number in their release, the ABS, but they don't give you the month-on-month number. But between April and May, the monthly CPI actually fell by 0.4%. So we're actually got, on a monthly basis, deflation. So, and it's annualised, that's 4.8% deflation annualised. Now, of course, it's just 1 month, so you don't take too much notice of that. But still, it's worth noting that, prices overall fell in May.
With oil being the biggest one, the petrol price?
That was one of them, but there was pretty much across the board. I mean, prices are very weak. You'd have to say inflation.
This is early AI productivity, Alan, possibly. Because I agree, I'm surprised it's so strong. But as the New South Wales budget noted in explaining their surging property tax revenues with forecasts for it to keep rising, they say in writing, we think residential prices will keep going up because interest rates are going to come down. So it's absolutely a cause and effect. With the lower the interest rates, the higher the property prices. So it does not help affordability at all.
No, definitely. House prices are going up now. That's for sure.
Now, Andy says, my wife and I are listening to the Money Café driving around Belgium. We love it. And I have a question regarding LMI. That's loan mortgage insurance and housing affordability in Australia. With all the chat around housing affordability, I rarely hear LMI mentioned. If the banks are making such huge profits, but a large chunk of Australia's population is struggling to come up with a house deposit, why is LMI not covered by the bank? So I just think that I agree. Why should the most indebted borrowers have to pay this extra cost to buy the bank their own insurance? It should be a cross-subsidy from the wealthy to the battlers, and the banks should just absorb the lot and include and decide which loans to insure and which not, and include that in their pricing, not bolt it on as a surcharge for anyone who's borrowing more than 80% or whatever the particular bank's trigger is, to force the client to shell out for expensive, never claimed mortgage insurance.
Yeah. So, Andy, as you drive around Belgium, we're in furious agreement with you.
Correct.
Marshall says there are rumours that the average politician owns 2.5 homes. So is this a massive conflict of interest that these politicians are also in charge of policy? They could reduce immigration immediately if they wanted, but don't because it's not in their best interest. They keep focusing on building more homes, but no one is interested due to the cost of materials, labour and shortage of skills. There's probably an element of that, sure. But I don't think that really does much influence their decisions on housing, to be honest, but still.
Yeah, I mean, look, it's a point that there's a lot of politicians that are negatively gearing. That didn't stop Labor trying to grandfather it. But I think in terms of powerful forces that are behind Australia's high immigration rates, I would argue probably the big business lobby looking for Labor and Treasury will always argue that strong immigration drives tax revenue, drives growth. So this whole need for growth, need for a growing economy and showing the world that you're a productive, growing place, immigration is key to that. Places like Japan, which are forecasting 30% drop in population over the next 30, 40 years, they're having existential discussions about shrinking, and because they don't have a culture of immigration, whereas we it does drive the economy. But there's, and the universities drive it. And the other big driver is that people want to come here. So if everyone's banging on your door, it's quite hard to keep saying go away. And Australia is one of the most popular places in the world to migrate to.
I mean, Canada has recently announced big immigration cuts, not a freeze, but they've really, really cut immigration significantly. And, there's no doubt, and that's part of the housing policy, and there's no doubt that doing so in Australia would help with housing affordability for sure. But as you say, there's a lot of forces, a lot of powerful people want immigration to continue.
And the government has tried to put a price signal against it. You know how much their visa revenue is this year in the budget? It's over $4 billion.
Right.
So people talk about, where's the resource rent tax at only $1.5 billion? Well, they're slugging anyone who gets a visa. They're giving the government $4 billion a year because they've been jacking up the price of all sorts of visas as an easy revenue grab because, foreigners don't vote, and to send a price signal, don't come here. But they probably need to make it, $20 billion before it would actually lead to population declines because the pull factor of the world's best country is very strong, and a lot of wealthy people are coming here, wealthy students, etc., and someone will just pay the hefty visa fees and in they come.
Alex says, this email includes a question, but mostly it's a bit of a whinge about Stephen Mayne and his strange views on education. In his podcast contribution for the second time, Stephen suggested private school fees should be tax deductible, framing it as a cost of living issue. How silly and out of touch, and so on.
I'm not saying...
Go on.
So my policy, we always have thought bubble policies on tax reform. My policy is very straightforward. $10,000 maximum tax deduction per kid. And maybe you'd throw in a means test on that as well. And we've got the very, very high reliance on income tax. And if we've got a middle Australia, cost of living crisis, then a lot of people are hurting, paying those school fees. And we don't want to become like England, where it's only 7% of kids go to the private schools and 93% are on the government system. And a place like Eton costs $80,000 US a year, albeit with boarding. So very few countries provide any sort of government support to private education. Australia is quite unusual like that. It makes it affordable. It gives people more choice. And a lot of people do it, and a lot of people, we spend over $500,000, cause a lot of stress and strain, and a little tax deductibility on that when people are in their most stressed periods with school fees, sandwich generation, mortgages, it would go a long way because people are paying very high marginal tax rates and copping lots of things like mortgage payments and school fees, which you've got to pay after tax. So it's very, very expensive. Are you with me, Alan, or am I an elitist on my own on this one?
Oh, you're definitely elitist, Stephen, but so am I. So yeah. But Alex says, do you agree that a strong, well-funded, widely accessible public education is good for the economy?
Of course.
And I think we both are in full agreement with that.
Not taking a dollar away from the government system. It's a pure consumer relief question, but you absolutely want a fantastic, well-funded government system as well.
Okay, next.
Milan says, I was disappointed by Alan's dismissal of dividends in Australia's very rational dividend imputation system. While Australia's approach, eliminating double taxation, is arguably the fairest, despite being abused by Howard and Costello through refundable credits, says Milan, we're not alone. The US has qualified dividends, the UK offers tax-free allowances and lower rates, and Canada has a gross-up and credit system. I challenge the idea that high dividends have held back Australian growth companies, and many US companies like Exxon, Chevron, McDonald's, Coke, Pepsi pay strong dividends while expanding globally. And then Milan goes on to say, we've created great companies like BHP, CSL and Macquarie overseas, and they all pay dividends. What you say, Alan, your attack on dividends is unfair, says Milan. Your response, boss.
Oh, Jesus. Well, no. Okay, all right. Well, I don't think we're going to change it. I think the reality is that Australian companies are going to keep paying out large amounts of dividends because that's what investors demand. And so that's just the way it is. And it is also true that American companies, particularly tech companies, that don't pay dividends are reinvesting in their businesses at a large, to a large extent. So to a larger extent than Australian companies do. So that's just the way it is.
I'm with you, Alan.
The Labor Party proposed in 2019 to get rid of the cashback element of it, so that if so that people couldn't get a cash refund out of it, and they lost. I mean, and I think there was a big backlash against that, and I don't think it's coming. I don't think any government's going to be game to get rid of cash refunds.
Yeah, but I agree that its dividends are overly tax preferred. It's why we don't have any form of listed bond market like the Kiwis do, because it's just not tax preferred. There's no franking on your coupon payment on your listed retail bond, and we haven't produced enough companies. Like, you can add a few others like Aristocrat, Computershare, Cochlear to that small list that Milan said of our great global success stories, but we're not entrepreneurial enough. Too many of our great companies just sit back in cozy oligopoly, duopoly situations like big supermarkets, big insurers, big banks, and just max out their profits and pay fully franked dividends. And whenever they look to go offshore, everyone says, no, don't risk it. Just give us the steady, fully franked dividends. So we become an inward-focused country. And I'll never forget 2015, Alan, when the big four banks, raised about 20 billion in capital because APRA had said they got to be stronger for longer, blah, 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 and paid out 20 billion of dividends at the same time that year. And I said, why don't you all just cancel your dividends for a year and save the 20 billion that way? Oh, no. The Australian culture of dividends, you have to keep paying them, even if you got to go and borrow the money straight back off those very same shareholders you've just given it to and raise 20 billion to fund 20 billion.
No, that's right. But at least the capital raising is.
That's why the Wall Street banks love Australia, because it's a massive churn. They're all companies. Anytime a company does a takeover, they have to do a capital raising, and they clip the ticket for 2%. When American companies do takeovers, they can fund it from their strong balance sheets because they haven't paid out every last dollar to max out the franking credits. And the system reaches its ultimate fast. But do you remember Briz Connections, that dodgy Brisbane toll road company? And they were paying dividends, for the 4 years during construction of the toll roads. Oh, people will buy the shares if we're returning capital. So they had no money. They had no profits. They hadn't even opened the toll road, but they're still declaring a 6% dividend yield because this is the way in Australia. So that's why Virgin's interesting, because Virgin's saying not promising any dividends, but the stock's still trading all right. So.
Yeah. Lou says, we're just going to jump ahead here. Lou says, just wanted to say the CBA and in particular its surging share price was the subject of an article in the FT last week. I emailed them after listening to the Money Café episode recently when you discussed its relentless rise. I wanted to see if they were also curious. They were. But I'm not just familiar with the finance term widowmaker. Can you explain it? I do hold CBA shares, but I don't know how nervous I should be at the moment. No, widowmaker doesn't refer to the idea that they'll fall. It's the fact that any fund manager that doesn't own CBA shares is in trouble, and that's a lot of them.
Yeah, it's a bit of a bizarre comment. It's basically saying that you're so stressed out because you're not making good profits and other fund managers are outperforming, you're going to have a heart attack and create a widow.
Yes.
So
correct.
It's a bit sexist. It's assuming all fund managers are male.
A lot of them are, though.
And I blame Andrew Cornell. He used this widow maker thing in a Capital Brief article last January. I think that's where it started, and then the FT borrowed from that. So,
well, I tell you what, since January, the CBA is up 25%, and it's paid a $2.25 dividend. So it's unbelievable what's going on. I mean, it's now yesterday it went above $190. It's incredible. It just keeps rising, and no matter how often poor fund managers who don't own it sort of grizzle it that it's too expensive and it's a bubble, it just keeps going up.
And what doesn't make sense is that the other banks aren't going up as much. The only differential really, apart from the halo effect and being number one, is the massive unrealised capital gains that the other three big banks don't have. And no one can afford to sell.
But also CBA now represents 12% of the index. I mean, it's just this colossal.
Yeah. I remember when News Corp got to 10% of the index, everyone was saying this is unhealthy.
Yes.
You shouldn't have one company so dominating. But
and then guess what happened? It went down.
It did. Yeah, correct. And then they ran off to Delaware. So run away from questions in Adelaide, I still reckon. But so
That's
I
right.
don't know.
They
I'd
were
be
getting
selling
away-
my one Commonwealth Bank share if I wasn't going to the AGM, Alan, in October. I would be selling my one share for $190. But because you have to spend $500 buying back in, I'd have to buy 3 for $570 just to go to the AGM. So I'm not going to crystallise that $100 capital gain selling my one share.
That's extremely wise of you, Stephen.
Thanks, Alan. Now, last couple, Dave says, actually, no, we'll do Amanda. I was listening to your podcast while strolling down Singapore's Tanjong Pagar area when I saw Alan's name in lights. And there's a big sign over a shop, Kohler Experience Centre. And Amanda took this sign as a signal to send a question, which is, if super is meant to last 30 years, is it time to stop thinking about nest eggs and start thinking about golden geese? I mean, what's the real risk in retirement? Running out of money or being too afraid to spend it? So that's the question of, it's not really funding people's retirement. It's just a massive wealth aggregation, tax-effective device for generational wealth transfer.
And we should say that Amanda has sent a picture of the Kohler Experience Centre. And sure enough, there it is. And I presume when you go inside it, what you get is a hologram of me showing graphs and talking at you, which should just be a fantastic thing to do in Singapore. Gosh, it would just make your day, wouldn't it? No, the Kohler Experience, just so everyone understands, that the Kohler Experience is actually just going to the toilet.
Because Kohler is a toilet brand, isn't it, in Germany?
It certainly is. And in fact, I have been to the Kohler toilet factory in a town called Kohler, Wisconsin, in Wisconsin.
Is that right?
I have. And so I walked into this Kohler factory, which is a vast thing, and on the wall, this huge wall, which is, crikey, it's 3 or 4 stories high, is a pile of toilets. It's like a wall is covered in toilets of different colours, and it's quite a sight. Anyway, I bowled up to somebody and said, "Hello, my name's Kohler," and they couldn't care less. I was just like the 5th person that day who'd said their name's Kohler.
Well, on that point, Alan, we probably should close the lid on this edition of the Money Café.
Yes, very good. Okay. Thank you, Stephen. No, did we answer Amanda's question? Did she have a question?
Yeah, well, basically I was agreeing with her that her question was that super is basically a wealth, golden geese. You know, it's a wealth accumulation device and people are too afraid to spend their super. And this is right. Do you know anyone who's actually said, yes, I started off with $1 million and now I'm down to my last 50,000 and I reckon I've got 6 months to go before I go into palliative care? I mean, do you know anyone who's ever done that?
We're all living too long. You know, you can't actually bet that you're going to die. You can't bet fast.
And the stats show that a large proportion of your total medical spend is in your last 6 to 12 months. So you do need to keep that pile for basically the nursing home bond can, 500, 600, 700,000, and then all that medical stuff in your last 12 months. It would be reckless to run yourself down to your last 50 when you're 97.
Well, that's right. My mum turns 97 next month. I mean, she never had super, but if she did, she would have run out long ago.
Yeah, well, my mum's 85 and she doesn't have any super. So there's a whole bunch of people who don't have any super because the whole system started. So we really don't know whether people will spend their super. It's probably a bit early to say because there aren't people in their 80s and 90s with big piles of super.
I know, but we're all taking statins now, so we're not going to die. Yes,
well, that's another issue. But great discussion, boss. Alan
Excellent.
Kohler, AM.
Thank you, Stephen. Good to talk to you. And thanks, everyone, for listening to today's episode of the Money Café. I'll be back next week with James Thompson. Send in your question to themoneycafe@eurekareport.com.au and we will endeavour to get to it. So until then, I'm Alan Kohler, founder of Eureka Report and the finance presenter and columnist for the ABC.
And I'm Stephen Mayne, and we'll see you in a fortnight.